Welcome back to the channel Stock Market News Beat the Index. Today we'll speak about the best investments for July. Here are the top 5 stocks to purchase now and hold for the foreseeable future in July. Chevron is the first. This year, the energy industry is back in vogue. And no other company but Warren Buffett's Berkshire Hathaway Incorporated has been investing more money in top energy firms. Chevron was promoted by Buffett earlier this year to become Berkshire's 4th largest holding overall. With the current inflationary climate, exorbitant gas prices, and ongoing uncertainty over fuel sources coming from Russia and Eastern Europe, that makes a lot of sense. The dividend yield for Chevron has also increased once more to around 4%. Toyota Motor Corporation is the second. Automobile manufacturers are an example of cyclical businesses that have recently sold off. After a very prosperous 2021, a weakening economy and rising interest rates may result in a decline in demand. But there is some good news for Toyota. For starters, resolving supply chain difficulties ought to provide automakers access to a more consistent supply of semiconductor chips and other crucial materials. Another reason is that Toyota, which is known for offering a wide range of fuel-efficient cars, should benefit from the rise in gas costs. Speaking of earnings, investors have a favorable entry point with Toyota shares trading at approximately 10 times earnings and near 52-week lows. Home Depot is the next one. The market for Home Depot's many products, including furniture, paint, carpeting, lawn and garden supplies, and other items, won't be wiped out by higher mortgage rates alone. Home Depot's stock typically trades at a price-earnings ratio that is quite high. Home Depot is currently trading for about 17 times earnings despite share prices declining by about 34% as of late June. That's a bargain. One of the biggest manufacturers of medical equipment is Stryker. Joint implants, surgical tools, endoscopy, and neurovascular devices are among the product categories. Stryker is not solely focused on joint repair, in contrast to certain competitors. Stryker should be able to navigate through pricing constraints or short-term demand issues in any one line of medical equipment because of this variety. Due to concerns regarding near-term earnings, Stryker stock has fallen around 26% this year as of June 29. Shares now trade at about 21 times projected earnings. One of the least expensive large banks in America is Citigroup. With the stock down roughly 23% for the year as of June 29, it has only grown cheaper in 2022. Even when Warren Buffett began buying more Citigroup stock for Berkshire Hathaway, that fall has been taking place. The appeal ought to be clear. The price of Citi shares is only 5.6 times profits, and they have a 4.4% dividend yield. Additionally, Citigroup has a book value per share of $90. Given that the stock price was below $50 at the end of June, this indicates that shares are trading at a significant discount. If you'd like to earn money buying rights, click the previous video on our YouTube channel.